Good news, listed banking group Equity has registered a 30% growth in its third quarter profits on what the management attributed to reduced funding cost coupled with strong and sustainable net interest margins. The group saw its profit before tax for the 9-month to September 30th jump to 11.79 billion shillings, up from 9.09 billion shillings in a similar period last year.
The bank also saw its regional subsidiaries in Rwanda, Uganda, Tanzania and Southern Sudan, including insurance and investment banking business, contribute 3.75 billion shillings, a 14.1% of the total revenue. According to the Group Chief Executive and Managing Director James Mwangi, the bank's underlying business model of collecting large volumes, small ticketing savings and transportation deposits ensure that the cost of funding remain manageable.
The funding of the bank is fully sourced from the savings. And savings provide two things: what you could call low-priced cost of funds, but at the same time, a huge opportunity for transaction processing.
The bank is now setting its eyes at maintaining its focus on customer acquisition in order to maintain and sustain an attractive net interest margin, which remains high at 12.7% during the period under review. Net interest margin refers to the difference between yields on interest earnings, assets and cost of interest-bearing liabilities.
In all this, what we have really achieved most is to be a market pioneer and a market leader in a segment that we have tried to really be the leader by giving the second runners-up a very huge margin.
According to the period under review, Equity Bank's group total deposit grew 10% to 164.59 billion shillings from 149.66 billion shillings, while net loans and advances rose 20% to 131.34 billion shillings from 109.37 billion shillings, with interest expense on customer deposits growing by 123%, reflecting the high cost of funding driven by the high interest rate regime. Interest income on loans and advances advanced. Interest income on loans and advances advanced 81% to 20.27 billion shillings from 11.1 billion shillings. Shareholders' funds increased 24% to 39.24 billion shillings from 31.76 billion shillings. Philip Keitan for KTN Business Today.